We're looking at exercise 515. And 515 will cover quite a few learning objectives. Learning objective 3, learning objective 4, learning objective 5, and learning objective 7. So we really cover off a lot in these types of questions. Applying overhead, T accounts, journal entries. Isn't that exciting? Medusa Products uses the job order costing system. Overhead costs are applied to jobs on the basis of machine hours. Okay, so there's our activity-based machine hours. At the beginning of the year, management estimated that the company would incur $170,000 in manufacturing overhead costs for the year. All right, let's make a note of that. Our estimates for overhead are $170,000 for the year, and work 85,000 machine hours. So our activity is 85,000 machine hours. So there's the setup for our predetermined overhead rate, and if we calculate that, we'll get 170 over 85 is $2 per, here it is right here, per machine hour. Let's be careful about what it is, right? So let's see what's required of us. Required, number 1, compute the company's predetermined overhead rate. Ah, well, look at that. Number 1 is already done. Let's move on to number 2. Assume that during the year the company actually works only 80,000 machine hours and incurs the following costs in the manufacturing overhead and work in process accounts, and we're given 2 T accounts, one for manufacturing overhead, one for work in process. Copy the data in the T accounts above onto your answer sheet. Compute the amount of overhead costs that would be applied to work in process for the year, and make the entry in your T accounts. Okay, so, well, we have our manufacturing overhead account, and we have our work in process account. And in our work in process, we're told that direct materials is $530,000, and we're told that direct labor is $85,000. But we don't have a number for manufacturing overhead. For manufacturing overhead, we are given a bunch of entries. Utilities at $14,000. We're given insurance at $9,000. Maintenance comes in at $33,000. And you should be writing these out as well. Indirect materials. Remember that indirect materials is a manufacturing overhead, $7,000. Indirect labor is coming in at $65,000. And finally, we have depreciation, which will come in at $40,000. And if we total this side up, we get $168,000. But you'll remember that actual costs enter manufacturing overhead as a debit, but applied costs leave. What we need here in work in process is an applied cost, which must come from here. So this number must come from here. The question is, what is this number? Well, we know that our predetermined overhead rate is $2, and we know that our actual machine hours are 80,000. So remember, step number 2 to figure out applied overhead, applied manufacturing overhead, equals our actual activity base. Here it's machine hours, so it's our actual machine hours multiplied by our predetermined overhead rate, which will give us 80,000 times 2, and that gives us 160,000. So we'll put 160,000 here, and 160,000 enters work in process. Remember now, we're not putting our actual costs in work in process, only the applied costs. I'm going to repeat that again and again. Well, that's it for 2. Number 3, compute the amount of underapplied or overapplied overhead for the year, and show the balance in your manufacturing overhead T account. Prepare a journal entry to properly dispose of the balance. So let's go to number 3. We have 168 on this side, we have 160 on this side. So 168 versus 160, if we clear it out, we have $8,000 left on this side. We have an $8,000 balance here. So because we've cleared out 160, there's 8,000 left. We got to get that out of there. Now we need a journal entry to get it out of there. So our journal entry will have manufacturing overhead as a credit entry for $8,000. So we need a debit entry for that $8,000. Remember the rule. If you have underapplied overhead, because this right now is underapplied. We had 168, we applied 160, we didn't apply enough. There's 8,000 that we didn't apply. So this 8,000 is underapplied, is closed out to cost of goods sold. There's our journal entry. So we're underapplied by $8,000. We close it out to cost of goods sold. That would give us an $8,000 entry on the debit side. And extending our T account down, we would now have a 0 account on that. Number 4. Now, number 4 is not as simple as it sounds. Follow along here. Explain why the manufacturing overhead was underapplied or overapplied for the year. This requires 2 steps to answer. You can look at it, the simple answer, and the half-truth, it's half right, is to say, well, our predetermined overhead rate was based on 85,000 hours. We only worked 80,000 hours. So we're 5,000 hours short of what we thought we'd be. So if we took the difference, the 5,000 hours, and multiplied it by the $2, it would have required another $10,000 in manufacturing overhead. So we can argue that manufacturing overhead was underapplied simply because we only worked 80,000 hours instead of 85,000 hours. And that would kind of make sense, but that would be slightly wrong. And follow my logic on this. And for many students, this is a hard leap to make. The costs of $170,000 were based on 85,000 machine hours. 85,000. We actually incurred 168. You incurred $168,000, which is lower than the 170, but you only worked 80,000 machine hours. So if you did this division, you'd get to $2.10 per hour. We had a $2 manufacturing overhead cost per hour. We estimated, keep in mind, we estimated $2 per manufacturing hour. We actually incurred $2.10. You cannot argue that, well, the reason is because we used 5,000 hours less. If we used 85,000 hours, we would have charged $170 instead of the 168. And that would have made sense with the 170 being what we did. Yes, you would have applied that, but that's not what you actually incurred. So here's the logic. You're at $2.10 an hour, which is more expensive than the $2 per hour. If your forecasts were correct on your costs, in other words, if your manufacturing overhead forecast was correct, then you should have come in at $2 per machine hour, which means that for the 80,000 hours, we should have come in at 160,000 on actual costs. We came in at 168. So the reason is our costs are higher than we anticipated. Now, many people will answer this question by saying, well, it's because we worked 5,000 machine hours less. Well, if you worked 5,000 machine hours less, your costs should be that much less. But they weren't. Our actual costs were very close to our estimates, 168 versus 170, with 5,000 fewer hours of machine time incurred, which means our estimates are off and our costing system is a little off. We're underestimating what things are going to cost us. So that's a difficult question. It's not that straightforward. Many people answer it by saying, well, only 80,000 hours were worked. We said 85, so there's the difference. But if you take the actual overhead rate during the year, not the predetermined, we see it was $2.10 an hour. That means that our costs came in higher than we thought. Now, if this came in lower, then yeah, we could blame the shortfall on the hours, but it came in higher. Exercise 516, and this will cover Learning Objective 3 and Learning Objective 5. Now, if you've attempted this question and you thought, this is really difficult, well, you're half right and you're half wrong. It's actually a very easy question. What makes it difficult is the information is not given to you in a form that makes it easy for you to simply just plug it into a formula. And that's what we've been doing so far. Most of these questions have a known procedure, and we're taking numbers and we're dropping them into this known procedure and coming out with an answer. It's really just a sort of just a one-step answer. This one requires us to think a little bit. So let's get to it and let's see what's being asked of us here. Sportway produces high-quality tennis rackets and golf clubs using a patented forming process and a high-quality hand finishing. Products move through two departments, forming and finishing. So we know that they move through two, and you know I like to do this. I like to organize my information as I get to it, right? So we have a forming department and we have a finishing department. So let's just make notes of that, because there might be some numbers that we want as well, right? The company uses departmental overhead rates to allocate overhead costs. Well, that's a predetermined overhead, right? Overhead is allocated based on machine hours in forming and direct labor cost in finishing. So we know that we're dealing with two separate predetermined overhead rates. So what do we need for the predetermined overhead rates? We need estimates, right? We need estimates in this department, and we need estimates here. We need estimates for both. But what kind of estimates? Both require an estimate of manufacturing overhead. That's our numerator, we know that. But we're told right here that overhead is allocated based on machine hours in forming. So here's forming, so we know our numerator, we're looking for estimated machine hours. And when we read on finishing department, we see that it's direct labor cost, so there's our direct labor cost. So we know what we're looking for now. We don't have to go hunting and trying to figure it out after the fact. We haven't even read the question, but we know what we're looking for. To figure out these overhead rates, we're going to need four numbers. Let's keep reading. Information related to costs for last year is provided below, and this is where it gets tricky. Typically, we have these two departments. Typically, what we'd normally expect out of the questions we've had so far is that their costs would be given to us based on each department, and we just have to pull the numbers out. But this is not the case here. Our costs are given to us based on each product, and we're not given total cost, we're given per unit cost. Uh-oh, that's tricky, right? So we can see for tennis rackets, we'll just go down one column. We're estimating that we're going to sell 5,000 tennis rackets. Our direct materials per unit for a tennis racket is $4.50. Our direct labor per unit, well, remember, each product goes through two departments. So the tennis racket has to go through the forming department first, and then it goes through the finishing department, and then it comes out. So it's going to experience direct labor in forming. It's going to experience direct labor in finishing. So we're told in the forming department, direct labor is going to cost us $8 per unit. In the finishing department, direct labor is going to cost us $3.50 per unit. But the forming department uses machine hours. The finishing department uses direct labor dollars. Okay, so we're getting somewhere, right? Now, once it leaves the forming department, it heads into the finishing department. The machine hour. We just did direct labor hours. Now we're doing machine hours. In the forming department, it takes 0.75 machine hours. That's what we want up here, 0.75 machine hours. And then in the finishing department, it takes 0.25 machine hours. But we don't want machine hours down here. We want direct labor costs. So you see the difficulty here? If we were given the costs in terms of departments, it would be easy. But we're given them in terms of product. So an easy way to do this is to turn the book sideways and read it as a 2x2 matrix the other way around. I know that sounds kind of abstract, but here we go. Let's look at what's being asked of us here. In addition, the firm budgets manufacturing overhead at $52,000 in the forming department. Aha! So we have one of our numbers. Here's the forming department. So we have $52,000 up here. There's one of the four numbers we need. And $45,000 in the finishing department. There's $45,000. Okay, so now we just need a denominator. We need our total budgeted machine hours. So if you go back to that chart, have a look at, let's just follow the tennis racket. We're going to make 5,000 tennis rackets, right? Well, how many machine hours do the tennis rackets require? The tennis rackets require 0.75 machine hours. So 0.75 machine hours times 5,000 rackets plus, look at the golf clubs. How many machine hours in the forming department does the golf club require? So if we go down to machine hours, we see it requires 0.25. Now we're only concerned with the forming department. That's all we're concerned about. If you look down on golf clubs, you'll see it requires 0.25 machine hours in forming, but 0.5 machine hours in finishing. But finishing doesn't base its costs on machine hours, it bases it on direct labor costs. All we're concerned about is the forming department. That's it, because that's what we're working on. So, golf clubs, there's going to be 8,000 golf clubs, but each requires 0.25 machine hours in forming. That's all we're doing, times our 8,000 golf clubs. So, that would give us our 52,000. And our base number down here is 5,750. We're going to get a very messy number. It's not going to work out very neat. We're going to round it up to $9.04 per machine hour. So that's how we get our predetermined overhead rate for forming. All we did was we went through each product and we said all we're concerned about is the machine hours in the forming department. That's it. That's what makes it difficult. Is to this question is not difficult in its complexity in terms of figuring out the answer. It's difficult in its complexity in determining what the information we need is to solve the answer. So let's go through finishing and we'll see that finishing is the same. What goes through finishing? Both products. Tennis rackets go through finishing and golf clubs go through finishing, and we're looking for the direct labor cost in the finishing department. So let's go through tennis rackets. We'll go down to direct labor cost per unit. The first one we get to is $8. That's the forming department. Do we care about that? No, we do not care about that because that's the forming department. We're worried only about the finishing department. That's $3.50. So it's $3.50 times our 5,000 units plus, let's look at golf clubs now. Golf clubs in the finishing department under direct labor will incur $4 per unit. $4, but it makes 8,000. It estimates 8,000 of those units. So if you expand the denominator, we'll have 45,000 over 49,500, which gives us 0.91 or about 91%. Now, why am I not saying dollars? How come I didn't say 91 cents? Well, because this is manufacturing overhead based on direct labor dollars. So that means for every dollar of direct labor cost, we'll apply 91 cents of overhead, or 91% of the total. That's what that means. That's not a dollar sign. It's a multiplication factor. We'll multiply our total labor cost by 0.91 to get our manufacturing overhead. So have we answered that question? Determine the overhead application rate for each department. Well, we think so. Number 2, determine the total cost per unit of tennis rackets and golf clubs. Now this gets a little bit tricky as well. And the reason I kind of, like and I kind of hate this question. I kind of hate this question because many students don't get past it, but I kind of like it because it's as real world as you're going to get without being in the real world. It's messy. It's not very neat. So number 2, we need our per unit costs for each product. So let's look at our tennis and our golf products. And we need our total costs. Well, total costs, remember, manufacturing costs come from 3 sources: direct materials, direct labor, and manufacturing overhead, right? So let's look at tennis. Let's look at our direct materials. Well, told it's $4.50 per unit. And for golf clubs, we're told that it is $3.50 per unit. Let's look at our direct labor cost. Well, in our direct labor cost for tennis rackets, we have $8 per unit that we're going to incur in the forming department, plus $3.50 we're going to incur in the finishing department. Now you're probably wondering, I thought we were only worrying about one or the other. Well, no. That's only to figure out our predetermined overhead rate. To figure out our total cost per unit, we need the costs of everything in each department. So for tennis rackets, we're going to incur $11.50 in total labor costs. For golf, we're going to incur $7.50 per unit in total labor costs. Now, let's see what our manufacturing overhead cost is per product. Well, our manufacturing overhead cost, we have to apply forming and finishing because we have two different overhead rates. So how much of overhead of this $52,000 applies to tennis, and how much of this 45 applies to golf or tennis? So we have to apportion each of these. So manufacturing over tennis went through the forming department. The forming department is $9.04 per machine hour. And we're told that each product takes 0.75 machine hours. So we take the 0.75 machine hours, there it is right there, and we multiply it by $9.04, we'll get $6.78. So what I did was I took the 0.75 machine hours that the tennis racket was going to experience, and I multiplied it by the predetermined overhead rate. There we go, $6.78. In the finishing department, it's based on direct labor cost, but don't use the $11.50. No, you have to use the direct labor cost that belongs to the tennis racket. That's why this is a tricky question. So in the finishing department, it incurs $3.50. Right there, see? We're using these numbers here. It incurs $3.50 per unit in labor costs, and we're going to apply 91% of that as manufacturing overhead. So if you multiply 350 by 0.91, you'll get to $3.19. This will give you $25.97 per unit. The golf clubs, now we have to do the same thing, forming and finishing. Well, look here. All we're doing is we're just taking this number here, this 0.25 is how many machine hours we actually incurred, and we're going to multiply that $2.26 to apply the overhead. There's our predetermined overhead rate. So if you take 0.25 of 904, you'll get 226, right? Here, all we're doing is we're taking the $4, this is the direct labor dollar cost, and multiplying it by the 0.91. We're just applying overhead, right? And if you do that, we'll get $3.64. And if you add these up, we get to $16.90 in the golf club per unit. So these are our costs per unit. Now, we can check on each of these by multiplying everything by 5,000, multiplying everything by 8,000. Watch what happens here. And this is not required, but this is going to highlight something very important. So when we check this out, let's do our direct materials. Multiply it, we'll get $22,500 here. We'll get $28,000 here. We want to do the entire cost. Direct labor, we'll get $57,500. And if we multiply this by our 8,000, we'll get $60,000. Our manufacturing overhead. Now this is where it gets a little bit, falls off the rails a little bit. Forming and finishing. Our forming will be $33,900. Finishing will be $15,950, and for the golf club, we're looking at $18,080 versus $29,120. Now, if you add these two numbers together for forming, this is the applied overhead. We're applying this for this product and this for this product. So the forming department is applying $51,980 versus $52,000. What went wrong here? Why are we off? Why are we off on this one? Well, it's because we rounded off. We rounded off up here to the 904. If we didn't round off, this 33.9 would be 33,913, and the 18,080 would be 18,087, which would equal our 52K. So once we have this one, let's do the same for finishing department. We find that we have 45,070 versus what we thought would be 45. Again, if we didn't round off, 15,989 plus 29,091. There's your 45K. So our totals, 129 850. If you divide that by 5,000 units, you should get that same number. And our total over here is 135.2. And if you divide that by 8,000 units, you should get that number. And that's how we check to make sure that what we did makes sense. That is the end of chapter 5 for us. Now, this was a difficult question not in the math or in the process that we used, but it was difficult in the sense that the information given to us wasn't given to us in the neatest, tightest little form. We had to actually dig it out. That's the real world.